Hello traders, Dan here, and in this weekly trade review, we're going to focus on this concept of relative strength or weakness and how we use that concept in our overall trading approach using master trader strategies. These are the major concepts that make up our approach to technical trading in the financial markets. We're pattern-based technical traders. Price is king. No setup, no action. It's that simple. So once I do have a compelling setup, I'm looking at the candlesticks, bar by bar analysis. Where is that picture in the overall trend? Is it on support or resistance? What do multiple time frames tell me about the probability of that setup moving in the intended direction? This is today's subject, using the concept of relative strength in the case of going long, of course, or relative weakness if I'm considering shorting something. Volume analysis, it's secondary to us, but it could be a plus. What are the broader markets doing and what's our bias? Market internals we look at all the time too to see if we're at a turning point to suggest that even a compelling setup's not going to have the same probability of follow through because we're at a potential turning point of the market getting too extreme to bullish or bearish levels. And then once you find that, you enter. It's all about position and money management. Costco here, daily chart. So the blue is the 20 moving average, simple. 50 moving average is green, and red is the 200. So we still had a rising 200. This is in a long-term bullish uptrend. And these are short-term pullbacks, consolidations within an uptrend. But let's start right here. This was a bearish gap in an area of major support that closed with a wide range expansion engulfing bar. Buyers are lurking down here, bullish engulfing. That doesn't mean I'm buying over the high because I still need a pattern. I'm just making observations of price action. Now it broke out. Sloppy, but bullish consolidation above the 20. 50 MA is starting to flatten out. Now I have uptrends on short, medium, and long term. This bar is a closing breakout. That is my action bar to buy over the high of this. Consolidated some more. Shallow retracement. Bullish consolidation. Red bars ignored. Consolidation through time versus price. Another closing breakout. You can add, if you're still in it, or buy over that. Same thing. Very bullish price action above the 20. Shallow retracements, topping tails and red bars ignored. Closing breakout. Amazing strength here in Costco. Folks, come check us out. We have a live trading room, so Greg and I are giving education. We're scanning. We're monitoring open positions. You're watching us implement the master trader strategies in real time. We trade together, answer questions, and it's a fantastic room for learning. And now I'm showing you relative strength to the sector and into the S&P 500. So here's my Costco, the same chart I just showed you, but just starting here with the gap reverse. So that's the daily. This guy is strength. XRT is the sector ETF for retail that Costco is in. This was a breakout failure, deep retracement, sliced through this pivot, a bear 180 reversal, got smacked all the way back down to major support when Costco had a closing breakout in a wide range igniting to all-time highs. Spiders here. Got extended, another breakout failure, bearish engulfing, bearish gap. So on this particular day, they both bounced a little bit here, but the daily charts were very damaged. Whereas the Costco here is just on its own page, as we say. But you can now, I talked about the 3 bullish breakouts, which were the tradable patterns, and the concept of relative strength to the sector and the index just gave us additional confidence of that being high probability breakouts. Hope that helped. Email greg@mastertrader.com, my partner, or me, Dan@mastertrader.com. See you in the next video.